everybody. Good morning. Welcome to the morning show here on Stock Market TV. Spencer, Steve, JC, Alfonso, full crew with you today. We got Louie because it's Crypto Friday. We have Jason Perz hopping on again. I think Kenny will be here. I believe Kenny's back in the saddle today. I hope he's back in the saddle. We've missed him the past couple of days. What's going on? Green week, right? Going for it. We can get there. I think. I hope. Maybe. What up, chat? How we doing? Yeah, maybe we'll talk some football. Maybe. We'll see. Tough night for Dolphins fans. Great night for Bills fans. Yeah, that's what I got. Smash the like. Do me a favor. It really does help us. It sounds stupid, but the more likes you get on YouTube, the more likely YouTube is to recommend the video. It's a whole thing. But anyway, hit the like. Thanks. Here we go.
Oh, what a night. What a very depressing evening for those of us in Miami. Thank God for college football. That's all I have to say.
We are going to talk about it.
I don't think there's anything to talk about. I think we'll see what transpires and if Tom Brady's actually coming to the Dolphins.
It's a good thing you didn't make that bet with Sean.
I don't mess around with that.
You would have lost.
That's like a Cuban guy dressing as Fidel Castro. Like, no matter what, you can't do that. That would be like Spencer dressing as Hitler. Like, he's just not going to do it. Like, it's just not. Like, you can't do it. Like, no matter how bad things are, I can't wear a Gators shirt. Like, I'd rather just be dead. It just end of me. Anyway, one thing I did have in my mind, onto more important things. Why do you think, Strazza, that opportunity cost doesn't get talked about more, right? Like the risk of not being invested, like, or even worse, being short or bearish in a bull market where not only are you losing money because you're short, you're also not making the money that you should be making. So it just compounds. I mean, people making the mistake of, let's say, 2 years ago, bragging about their 5% yield. Like, that must be terrible. Like, how come that doesn't get more play, you think?
Hard to quantify.
Is it?
It's not. It's that in a bull market, most people are making money. So, we were just writing about industrials. Look at industrials versus the broader market. Look at like XLI versus QQQ. If you've been in industrials for the last decade or so, steadily up and to the right, it's been great. But if you look at it on a relative basis against something really good like the NASDAQ 100, it's been making new relative lows the whole way, right? But if you're owning industrials in your account and you're up 10, 15, 20% every couple of years, are you really worried? So I think that's why people don't think about it so much.
Imagine being 5% cash, 5% money markets. After taxes and inflation adjusted, you're actually paying money to not be invested. You're not getting paid to not be invested. You're paying money to make sure that you're not invested. Think about that.
Well, here's
I don't think it's quite to the negative.
It's negative. It's officially negative. We can quantify that too, Spencer.
Well, it's better than zero. It's better than what people are used to. So there is a recency bias there also, or an anchoring bias, right?
Yeah.
And then
also, people like getting paid, man.
And it's
risk. They're not getting paid. They're paying.
They see it. They see it in their accounts every month. They see it.
I don't know about all that. They're not paying shit. They're getting paid 5%.
They're not getting paid 5% because after you pay taxes and adjust for inflation, it's less than zero. So you're actually paying on a net basis.
You don't know what people's tax rate is.
Okay. Anybody who matters.
All I'm saying.
Anybody who actually matters
every month.
Real effect on the market, not like a $5,000 account. Like
every month they're getting paid, right?
We're talking about $6 trillion.
Is this like a Cato Institute study or something? Where are you getting bad data?
No, I got good data.
Every month they're getting paid.
Yeah, we are inflation adjusting.
He's inflation adjusting. That's what he's doing.
I'm inflation adjusted the cash that you're getting. Yeah, that's okay. I don't see anything wrong with that. Is there a problem with that?
Damn, we should have inflation adjusted the game last night. That would have been good.
Ooh. Pew, pew, pew.
All right, state of the markets.
Too
I
soon.
guess.
All right, let's go. Come
I
on.
don't know.
All right, ladies and gentlemen, we got the Dow futures up 75 points today, 41,220 for the Dow. S&P 500 futures up 20 basis points. That's 10 points, even 5,600 and change for the S&P 500. NASDAQ flat today. A big week for the NASDAQ, 19,450 for the NASDAQ 100 futures. We got the 30-year bond futures above 126.5, up a little bit. Crude oil up another percent today, pushing 70 again. That was quick. Copper literally right at that 420. Boy, does copper love celebrating that 420 for those who partake. Stuck at that 420 just again and again and again this morning. Gold up 0.2%, new all-time highs, 2,600 for gold futures. Silver up 1%, back above 30 with the volatility index under 17. We've got the Bitcoin over in funny money land, 57,700, down 1% on the day. Ethereum down 0.2%, 23.45. Solana at 132, down 3% on the day. Binance flat on the day, 543. Total crypto market cap. Spencer Israel, are you ready for this? 1.989 trillion, just a hair under 2 trillion. With the Bitcoin dominance still above 50%. What stands out this morning?
I don't round up unless it's 0.99, and I also don't round down. So if it's 2.1, it's 2.1. But if it's 1.99, it's 2. That's how I roll.
Let's just call it 2. 2 trillion compared to what? We're pushing $17 trillion market capitalization for gold. That keeps increasing, right? So you're looking at 17
trillion compared to 2.5 trillion.
What's that?
That's what I compare it to. You compare it to where it was 6 months ago, right?
You know, we were at 3 trillion and change a few years ago as well.
Oh yeah, okay.
What stands out from the futures today, Mr. Strazza?
We got follow through yesterday. Throw up my XLF chart. Right, so we talked about these candles. This is called a hammer candlestick. You see it at tactical bottoms, tradable lows, the XLF chart. We talked about the importance of those VWAPs anchored from the August 5th pivot low. All of your charts should be marked up with the VWAP anchored right there, right now. Perfect retest from financials. It was a down day, but a very bullish day, right? With that hammer candle.
This is Wednesday.
Yeah, right. We tested the lows. We tagged the VWAP. We came off, ripped higher, closed right towards the highs of the day. Follow through with another green candle yesterday. This is huge. I don't know if there's a more important chart right now.
I just want to two things that I want to point out that you're not smart enough to have done on purpose. Number one, the Japan hat. Very nice.
Yeah,
very nice.
Japan's been in the news. Have you heard?
Every day. When is Japan not in the news? If it's not the yen, it's something, right?
Yeah.
Also, Strazza talking about a hammer candlestick. The Japanese like to call it a hammer because the Japanese say that the market is hammering in a bottom. Hammering in a bottom. That's what it's called. Is you, Mr. Japan today? Is that what you believe the market was doing? Was it in fact hammering in a bottom for financials?
It's a bottom for now.
Bottom for now. Nice cop out.
Bottom for now. And you know, I think it was really big. The S&P, something similar, right? You know, retested a big level, 38% retrace. Tested that VWAP from the August 5th lows, bounced off it. We got some really bullish candlesticks here in the last 2 sessions. So see if we get more follow through to end the week here today. I think that would be very constructive. Let
me ask you this, Mr. Strazza. We came in on Monday. Dow was up 500 points, monster move. NASDAQ up even more. You were not impressed. Tuesday up again. Still, Steve Strazza, not impressed. Wednesday up again. Strazza, not impressed. Yesterday up again. You said, I'll know it when I see it.
Yeah.
Have you seen it? Are you now impressed? Are you entertained?
Wednesday. It was all about Wednesday. I like to see the Bears take their swing, right? That's why we love whipsaws and shakeouts. Like the Bears.
And they took their swing and whiffed, basically.
Took their shot Wednesday morning. Yeah. Those candlesticks look terrible. Like we talked about yesterday. 10:30 Wednesday, it was like, oh shit. Like we're retesting the lows. and the bulls came in, monster save, reclaimed some big levels, held all the big VWAPs, you know, and this is just a standard corrective wave. If you look at something like the S&P 500, completely retraced 100% of its summer sell-off, right? Retested those highs, and then it retraced 38%. There's like, that's just standard stuff, right? And if we dig in here and we start moving higher, I think that's great.
Mr. Spencer Israel, if you wouldn't mind throwing up slide. What happened to my slide?
Oh, we got a big Fed. We got a big Fed next week, or is it the week after?
How big are they?
What is? Yeah, wow, next week. Oh shit, Larry.
Is it the most important? Fed meeting of all time?
Probably not.
You with the most importance, huh?
Let me ask you this. Do you think this is important? Slide 2, please, if you will, my good man.
Everything is the most important.
Or the best.
Moving averages are fun.
Every single sector in the S&P 500 has their 50-day moving average above their 200-day moving average. Did you know that?
Hey, nice chart. I know you didn't mark this up. This is too clean for you.
I've actually marked it up this morning.
Really?
I did.
Wow.
Too clean. I invented the clean chart.
I know, but you know.
Have you noticed that people on Twitter are always like, how come everybody's chart always looks like JC's charts? We set precedents around here. I see you guys. It's okay. That's all right. What do they say? Mimic is the greatest form of flattery. What do they say?
Copying.
That's close. That's close enough.
Close enough. Yeah. No, I appreciate all the love, guys. You guys want your charts to look like mine? That's all right. You know, strive for the best. You know, good luck. It's a good chart right here, though. Right? Good chart.
No, look, industrials and financials, like I keep talking about, being obnoxious now, but they're so important.
What about the fact that every single sector in the S&P 500, there are now 11, all of them have their 50-day moving average above their 200-day moving average? What do we think? Is that's a non-event? Is that something that we need to think about? Is it further evidence that we're in a bull market, like we already knew? Like, what does that mean to you?
Do you need the moving averages to tell you if we're in an uptrend or not?
The answer is no.
Okay.
Love that. Yeah. Moving averages tend to come on the charts during basing periods, right? And trend reversals. When they're sideways, typically, we want to throw them on, but in a nice steady uptrend, you really shouldn't need it. What we like to say is, if you need to put a moving average on it, it's probably not something we want to be buying, right?
I mean, listen, at the end of the day, when you look at as many charts as we do, we don't need like a smoothing mechanism. Like these moving averages are like training wheels. Like if you're new to the market and like you have a hard time identifying the direction of primary trends and you need training wheels, like a smoothing mechanism to show you that line is going up, then there's nothing wrong with that. It's fine. But like after a while, like we can tell you where that moving average is without the moving average being there, you know?
You should be able to. And then, you know, I will say, shout out to the 50-day. Really good for the intermediate term trend. Like you see this all the time. The 50-day will flatten. The 200-day just kept rising all year, right? We were in this corrective phase. Huge range since what? Late February, early March. Look at the 50-day. Gets flat right away. And it tells us we're in corrective mode here. And then that 50-day starts reaccelerating higher. Look at as we're coming out of this nice little range. Just a really beautiful thing. I'm starting to like the 50-day more and more this year.
You know who loves the 50-day is Joe Fahmy. Loves the 50-day. Always has.
Sean, I think Sean enjoys it also.
Sean enjoys it too. These 50-day people. You know, I'm not really a moving average guy.
No,
but I do think it's an interesting fun fact that all of these sectors have a 50-day above their 200-day. You know, reiterating what we're saying, right?
You're not a big death cross guy?
If you are looking at death crosses, it's over, bro.
We need like one of those like Street Fighter voices, death cross, and like
finish him.
Yeah.
That's more.
You know what? I actually have that. I had a note to get that in somewhere. I never got around to it, but I also thought that would be fun, Steve. But yeah, maybe this weekend I'll go.
I don't have a set. They don't set up my soundboard, so I just make my own noises for now.
It's more of like a grunt and a heavy breathing. You sound Strazza when he's just standing there sounds like Sven from Frozen. You know the reindeer? That's what you sound like. You sound like Sven.
All right. Hey, should we talk some crypto? We got Louis here.
I think so.
Oh wait, I wasn't ready myself.
Crypto
now I'm ready.
Friday.
Crypto Friday.
Let's
Louis
do it.
Sykes.
Do it.
Got my fingers on the pulse, avocado and toast, leather seats, jet plane, always ready to go.
Good morning, fellas. Lovely to be.
Oh, Lou Dog having quite the hair day. Good hair day.
Thank you. Appreciate it.
You know. Louis. I hate to ask. But when moon, Louis?
Oh God, I'm pretty sure every time I've been on the show for the last month or two, you've asked that same question. I mean, I don't blame you, right? This market has been so boring that it's a valid question to ask.
Throw up slide 6.
I mean, retesting these lows. I mean, into this week, you know, on Monday, I was anticipating a little bit of a bounce here. We're getting that. And it was really interesting that when we were retesting these lows, funding dipped negative. And so if we just take a step back and analyze what that means, funding rates are calculated by the discount or premium between futures markets and spot markets. So when funding is negative, as it was heading into these lows, it means that traders are generally tilting bearish and you generally want to fade that. And so as you got those retests into the lows, you got a lot of these traders, you know, tilting very bearish. That set us up quite nicely for a little bit of a bounce just in the short term over the next, you know, 1 to 2 weeks. You're seeing that playing out, and you're seeing just a lot of these crypto tokens holding retests of support. So, as far as I'm concerned, this is pretty normal market behavior, pretty normal retests of support that you're seeing.
Can we throw up the Solana before we get to the helium? Throw the Solana, please, Spencer.
I mean, again, just look at Solana holding that 120. I'm long. You know, so long as we're above 120, then I think the bias is high towards the upper end of that range, up near 200. And it's really positive to see, you know, that rotation within equity markets, within stocks has been quite productive this week. You know, you look at the semiconductors on a relative basis, failing to hold that breakdown. That's very, very productive. And as well, within the context of the correlations with crypto, they're once again re-emerging. Throughout June and July, those correlations actually flipped and they were inverse, but now they've flipped back into positive territory, back to the historical norm. Now crypto is once again trading alongside equity markets. And so if you continue to see this positive rotation within stocks, then as far as I'm concerned, that's quite positive and productive.
Louis, I got to tell you something, man. Strazza, I want to hear your thoughts too on this. For me, the most bullish part of Solana has to be the fact that it hasn't gotten oversold at all in over a year, since summer of 23. This entire year, in every single one of these corrections that you're pointing out here, which are quite plentiful, there's a plethora of corrections here.
Indeed.
None of them reached oversold conditions using a 14-day RSI, which is, you know, pretty classic. If things were bearish and, you know, we were in downtrends, you'd be seeing oversold conditions. It's very characteristic. Go back and see for yourself. Go to your favorite downtrends of all time. You'll see a lot of oversold conditions. Go look at your favorite uptrends of all time. You'll see no oversold conditions. So when I look at something like this, I wonder, like, if you would have just showed me the price, I would have said 100%, you would have gotten a couple of oversold conditions probably, right? Zero.
I will slightly disagree with you there. I mean, Solana has been very bullish in the fact that it hasn't reached oversold conditions, but actually 75% of our crypto universe hit oversold conditions on the correction beginning in August.
Yeah, right. But Solana didn't. That's my point.
Yeah, exactly. And so you know, that is rather bullish. You know, looking at that 25% that are holding over that are holding within that bullish regime, very positive.
You know, can you run a scan of all the ones that are all of the tokens that have not reached oversold conditions on a daily 14-day RSI in 24?
You know, one that I could probably guarantee is Helium. That I sent you guys. You know, that's
Throw it up.
Relentless relative strength. Not many coins look like this, right? Breaking to
How
new
many tokens
highs.
are making new 6-month highs as we speak? 0.
You know, I got news for you. A lot of these Bitcoin miners would be on that list.
I know we talked about it in our meeting. MicroStrategy's never got oversold.
MicroStrategy would be on that list.
Yep.
Galaxy Digital would be on that list. Coinbase would not be on that list.
Right. That's right. Louis, you mentioned something. So hold on, finish up on this helium, and then we'll move on.
I mean, there's nothing more to say here than just relative strength. That's really it. You don't get right now in crypto.
There's nothing showing more short-term relative strength in helium at this point.
It depends how you're defining short term.
2 months.
Over the
2
short
months.
term, it has pulled back a little bit, and a lot of these other tokens are rallying. But over the last few months, no, it's helium is one of the stronger ones.
Throw my chart up. I got one that's been stronger.
Give it to me.
Ooh. What say
What is
you,
it?
Louis? Now
Speaking of old school,
I mean,
AAVE, yep, this one has been strong, pushing up to new highs.
Now
It's
that
really
I'm-
interesting. You know, I pay attention to what's happening on chain, and there is quite a little bit of smart money interest, particularly in this over the last few months.
great. That's great.
Yeah.
Now that I'm in it, these new highs probably fail.
Are you treating yourself as a contrarian indicator within crypto?
I think he's just skeptical because there aren't many tokens that are doing this. But think about the implications. Flip that on its head, Strazza. Let's say it does stick. If this sticks, there's probably more coming. Not just for this stock, but others are going to be sticking theirs too. Is my point.
You would think so, but a lot of the leaders keep faltering from what I'm seeing. You know,
Am I overthinking it that, you know, a breakout like this in AAVE requires the S&P 500 to break to new highs?
You're not good at sarcasm, Louis.
I want to. Jack is asking if technical analysis is just a fancy term for buying and selling pressure. No. Technical analysis is the study of the behavior of the market and therefore market participants. That buying and selling pressure impacts, right? That's part of that. That's it. That buying and selling pressure is what's determining those behaviors, right? That's part of the behavioral analysis. So it's not a fancy term at all. I mean, it's a pretty shitty term is really what it is. Howard Lindzen calls it chart art. I don't like that one either. Shout out to Lindzen. I think that's a dumb name too. Technical analysis is a terrible name. Chart art,
really bad.
Really bad. Also, just doesn't do the job.
No.
We're analyzing the behavior of the market and therefore market participants, as opposed to the goods and the services in which a market deals. In which case, we could give less of a shit.
We're studying the buyers and the sellers' behavior.
Yeah.
As financial psychology.
Is it?
Yeah, there's a lot of psychology involved, which is, you know, why I went down those rabbit holes over many years studying human behavior, because it all comes down to that. And when you can understand the behavior of humans, and Strazza himself is analyzing his own behavior, right? You start to do that. You can't help yourself. One more thing before I hop, Louis, you were talking about the CNN Fear Greed Index. Was that like a New Zealand joke, or did you have a point to make here?
I believe we call that sarcasm in my neck of the woods.
You guys have sarcasm in New Zealand?
Be more clear.
Do, believe it or not.
Yeah. Okay.
All right.
All right.
And so if you are one of these people who look at the CNN Fear Greed Index,
you deserve to lose money.
Just stop. Just stop. These people are not here to help you. They built this thing to purposely, maliciously confuse you, the investor. They're not here to help you. And just to reiterate, this is not a political thing. It could be the Fox News Fear and Greed Index, and it would still be just as dumb, right? It just happens to be the CNN. So, you know, if you take offense to that, well, then go look at it. Good luck. Go look at the calculation. I even wrote a blog post about just how dumb it is. Go look at the calculation. It was built to confuse investors maliciously. So if you've ever felt the need to go look at the CNN Fear Greed Index, just ram your head against the wall instead, and it'll be better, I think. All right.
Fair point.
Everybody have a good weekend. Louis, thank you for being here. Steve Strazza, Spencer Israel. Love you guys. See you Monday. Adios. Actually, I will not see you on Monday. I will be in California. So if you're in California with us in Huntington Beach, come say hi. Otherwise, I'll see you. See you when I see
See you
you.
in Chicago.
Adios.
And he's gone, just like that. All right. Cool. Dad's gone. Let's break shit.
Yeah, Strazza show. He's right. Throw it up.
Let's break stuff.
Oh, we'll actually see him Sunday night. We'll be all getting into Huntington Beach Sunday night. We'll be there for 3 days. So DM us if you want to get together while we're out there. Also, no, I did not have a 5 a.m. tee time. I was out there putting this morning. I do like sunrise putting though, before the maintenance guys get to the 4th green. So I usually have like 30 minutes. I could just go out there and just putt, have the whole place to myself. Sun's coming up. It's just beautiful. But no tee time today. Tee time Monday, I hear. With a friend of the show. I'm golfing with a friend of the show.
The last 2 days or 3 days, I've woken up naturally at like 4:30 or 5 in the morning. And my wife said there was like solar flares. And that's why my sleep is all messed up. Is that happening to anyone else? Maybe not you, Libby, because you're far away. But
what do you mean there's solar flares? What does that
I
mean?
don't know what she means. She said that there's like Mercury's in retrograde or something. So something with the sun. I don't know.
Louis knows stuff about the stars and the moons.
That sounds like some sort of astrology. I don't know.
No.
Do you have your own telescope?
I do. I've got a Newtonian reflector. Yeah.
I knew it. I knew he had a telescope. See that? I have some friends with telescopes. Really into it.
That's fantastic. You know, you look out there into the cosmos and it just puts everything into perspective. You go have a look at Jupiter, go have a look at the 4 Galilean moons, and it's like, wow, we are so tiny. It just puts it into perspective.
You know, I feel that way when I look at the ocean, but you're just like big dogging me looking at the stars.
just taking the one up on you there.
Yeah.
But I mean, the ocean, going for a hike, you know, you need to have something like that, particularly if you're in markets.
Ground you a little bit.
Exactly.
Good context.
All right, let's talk about
JC. It's like JC does like every other day on the show. He like reminds everybody how unimportant they are. Some people just like look through a telescope or stare at the water for that feeling. You know, others just come and watch the morning show and let JC tell them.
That's true. So some of us are going for punishment. You want to talk about some stocks and things and some charts? Louis, feel free to hang out if you want, man. I mean, it's up to you.
I think I need to head off. I think Casey wants to have a brief chat, so I'll talk to you guys later. You have a great weekend.
See you, Louis.
Later, Louis.
As always.
Give me the news, bro.
I want to talk about Adobe for just a second. We talk about these earnings and we give you the numbers, and something that I always like to remind people is like you can't be like super narrow focused on these earnings numbers because that's not the only thing that matters, right? In like Adobe's case last night, earnings were good, top line and bottom line, they beat. Guidance was like not amazing, it wasn't horrible. They came in like just below estimates, like a smidge below estimates, right, on their guidance. But think about what's happening with software this year, right? We've been talking about it. It's been a tough year, right? If software was a sector, it would be the 3rd worst sector this year if it was a sector, right? It's underperformed the S&P for most of the year. And so this is just an environment where when it comes to software, you shoot first and you ask questions later. Right?
Sorry. So we're talking about software. Let's look at it just relative to its technology peers. Software's been middle of the road over the trailing month or so. It's semiconductors and internet that are getting rocked. And then if you look out for like the trailing quarter, semiconductor equipment stocks are down 20%. Software stuck in the middle, like not terrible. So I guess
software, actually over the summer, it kind of flattened out, right? But
and then if you look at a year-to-date basis, semiconductors are the big winners.
Right.
Software is not bad. Like infrastructure software, 18%.
All right. I was looking at the IGV or whatever, and whatever. And my point is,
software, Spencer, to your point, is only up 3% this year. Would be one of the worst subsectors.
So my point is Adobe, and I think we have the Adobe chart, which, like I said, came in with the guidance like just barely below the estimates. It's down 8% this morning, right? 8%. That's a lot for a company as large as Adobe, right? That's a lot of market cap right there.
So
So
what happened? Why?
it was earnings.
That bad, huh?
Not again, like subjectively, is my opinion. I didn't interpret it as being like all that bad, but that's not what matters here, right? It's about the environment you're in.
Q3, yeah. Q3 results were strong, but a weaker than expected Q4 guide due to a timing of large deals caused disappointment. Adobe still shows solid Creative Cloud growth. Concerns linger over the Q4 outlook.
Again, the Q3, the Q4 guidance range that they gave.
They pulled forward revenue, is what I'm reading, pretty much.
Possibly the Q4 revenue came in, if you in the midpoint, it was like the guidance 5.52 billion, and 5.6 was the estimate. So we're talking about like 5.52 versus 5.6. It's not that much in the grand scheme of things. But like I said, down 8%. So
look, the shooting first, asking questions later.
Yeah,
with tech, especially with stuff that's been up a lot. Because what happens is the stocks get more and more expensive during bull cycles like this. You know, not everybody's growing as fast as Nvidia, so a lot of these valuations are really ballooning. I think valuations matter a lot right now. These things, they can't go up forever, and the valuations are, dude, do you remember back 2020, 2021, the valuations got crazy. Then we had 2022, and everybody's like, we'll never see these valuations again. A lot of those stocks that everybody was like, we'll never see these valuations again, are now valued far higher than they were during the bull run in 2021. Like already back to and through their old valuation ceilings from the prior cycle. So I don't know. It's not early, I guess is my point. Do we have any more news?
From on the earnings front, we had probably one of my favorite companies when it comes to just earnings, because I like not listening to the call, but reading the transcript. Restoration Hardware, because the CEO always says crazy shit. I didn't actually read anything last night, so I don't know if he said anything wild, but he usually says some pretty wild stuff. Anyway, RH is up. Do we have the chart? RH is up 20% this morning on their report,
dude.
And it's taken the other, like, I don't know what you'd call that, specialty retail with it, right? Wayfair, I guess, like online retail, right? Wayfair is up this morning. Williams-Sonoma is up this morning, right? It was a good. The numbers were good. They beat on the top line, beat on the bottom line. Revenue growth was above estimates. It was good.
It's a crazy looking chart.
Yeah,
man, straight sideways for more like 2 years now.
Do we have this one, Fonz? RH? No.
Hey,
Bummer.
What the hell is going on with Oracle? I mean, this is incredible. One of their best weeks ever.
Yeah. And
now
it's like, oh yeah. So there's the RH chart, right? Like I said, this doesn't even show up 20% this morning. It's on pace for its best day in God knows how long. And Oracle, it's funny because the headlines were like Oracle pops, and then the next day it was like Oracle pops, and then the next day it was like Oracle pops, because it keeps popping overnight.
This will be Oracle's
3 days in a row. Their earnings report was Monday.
Yeah, but like, that's what I'm asking. So this is one of those analyst parties. They just keep jumping on. It's like every morning there's another like big analyst upgrade. Is that what's going on here? That's the only thing I see this morning. Price target raised to 200 from 175 at UBS. Price target raised from 200 from 185 at Guggenheim. Raised to 185 from 175 at Piper. Raised to 201 from 175 at Bernstein. Raised to 140 from 120 at JPM. Raised to 190 from 175 at KeyBank. They love it. The street loves it. Raises revenue guidance is what I'm seeing this morning. Also, give me the deets. So this will be their biggest week. They're on pace to gain like 20% this week with the pre-market gains in there. This will be the biggest move since the dot-com bubble bust more than 20 years ago for Oracle. That's incredible. You know, it's not every day that we come on here because Oracle and Adobe usually report earnings around the same time. And it's usually Adobe, you know, beating and moving higher. But lately, I mean, Oracle's just been a monster. Really good stuff coming out of the Oracle. Uber, can we do Uber?
I don't think we have a chart handy, but that's okay.
Oh,
we can talk about it.
All we have is charts.
What you're talking about, the Waymo thing?
What's going on? I see some movement here.
They announced a partnership with Google and Waymo. Waymo is Google's self-driving thingamajigger, right?
Yeah, yeah, yeah.
So they're going to expand the autonomous ride hailing to Austin and Atlanta. So I guess you can hail a self-driving Uber if you're in Atlanta or Austin and San Francisco.
Okay, so that's good stuff. No?
I've never driven. If anyone in the chat has driven in a self-driving car, please share your experience. I've never been in one in my life.
I wouldn't do it. I think we're too early. Doesn't sound safe. Doesn't sound safe.
But Uber's up 8% this morning, so they like it.
Throw up this Uber chart. Check this out. Check this out right here. What does this mean to you? Chart 1. I missed a green circle on the lower pane. There should be a third little green circle there where we spike red. What, like, look at this chart. You see what we're doing here, right? This is a test. This is Uber. I have color-coded the 200-day moving average. I know, it's neat, right? You see how rally attempts during the downtrend on the left-hand side of the chart were stuffed by the 200-day moving average, right? Rally attempts were faded over and over and over again until the trend shifts. That 200-day moving average. Shout out to the moving averages today. This show is all about moving averages today.
Sure, but it also shows it's not always perfectly clean.
But then you come back, and that 200-day moving average becomes the floor for corrective waves over and over and over again. But there's been a slight change this year in the action. No?
Yes, but again, it also should, like, this does the moving average justice, but it also shows how it can be imperfect, as evidenced by that big sell-off a month ago, right? So it's not perfect, but yes, more often than not, it looks like that level is acting as support.
This is not a system. This is not a trading strategy.
Yes,
at all. It's for illustrative purposes only. But it's great, and this is a good example. But notice the change in character. Like Art Hill said, the change in the mood of the market this year from last year. Spencer, last year we tested this 200-day moving average twice, and those tests were fierce and met with huge rebound rallies. 65% and 100% right off the 200-day. See that? With momentum, zoomed higher, back in the direction of underlying trend. How about this year? One test, nice little bounce, didn't make a new high. Another test, we cut lower, cut below it, big shake, move back higher. We don't make a new high. Now we're testing it again for the third time, just over the past several months. You get an increasing frequency, tests of support before support breaks. Not saying that this is going to be a top in Uber, but I'm saying 3 tests of the 200-day in just a matter of a couple months doesn't make me feel all warm and fuzzy about all the Uber stock that I hold in my IRA.
That's a good point, though, because I was looking at it more from the support perspective, but you're looking at it as the rally or lack thereof off of said support, which is probably more pertinent to a.
There's a lot of stuff.
Yeah,
going on.
A lot of ways to look at this. Let me do one more, and then we'll bring on Jason.
Please.
It's really a shame that JC's gone for this. I want to talk about Boeing for a second, just because it's in the news. It's down 2% this morning, but they're striking over at Boeing. So when it rains, it pours, because they got problems on problems on problems, and it's nothing new. Obviously, if you've been following Boeing story for 5 years now, right?
This is a disaster company.
Boeing is exhibit A on just because you have a duopoly does not mean you're in a good business, right?
Sometimes you get lazy and you mess up.
Yeah,
when you're in some sort of like duopoly, monopoly type business. Right. See it all the time. So look at AT&T and Verizon. These idiots can't get out of their own way for decades now. Boeing, you just can't own it. I would like to propose banning this stock from Chart Request Live and other stock market TV shows. I'd like to
We
propose.
haven't banned it. I don't think we've banned a stock
I
for a
think we should.
minute. It's been a while.
If we had to ban a stock, I'd ban Boeing.
It'd be this one. I'm inclined to agree with you. It's just such a disaster.
You know what? Fuck them for stealing our peace of mind. Every time I get on an airplane, which is going to be Sunday night now, I got to sit there. And Boeing makes me feel uneasy.
Okay. Well, maybe you're flying an Airbus. Well, I don't know what to tell you.
And now I check. Anybody else? I never checked. I book a flight now. I'm checking the air.
Okay, I'm not gonna lie. The last when I booked the flight a few months ago, when I went out to I checked. I never checked before in my life,
and it sucks too.
And I checked.
It sucks because like when you check, you're not gonna not book that flight because it's a Boeing.
No,
you're just gonna know that you're on a shitty airplane.
What can you do? Not much.
Strazza's wrong on Boeing. Buy the stock.
I don't know. Yeah. All right. I think that was it as far as like headlines and stuff. Let's bring on Jason. Again, Jason, we don't have an intro for you yet. I'm sorry. We'll have it for you next time you're on the show, which will be in 2 weeks, but we'll bring you on. I'll give you the old special guest intro and then we'll get you on. How about that?
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Spencer.
Hello.
Hey, buddy.
Steve and I already spent some time together this morning. Ready to go.
Yeah, I'm already sick of you. We got to talk again now.
Oh man, that's messed up for a guy with flowers on his baseball cap. What's with the chat today? They're killing it, man. They're killing it.
The chat is on fire. Larry, please stop making me laugh so I can pay attention to the discussions that we're trying to have here. Jason, you wrote just a really great blog post yesterday. I think we just published it here this morning. I think it is so top of mind for the conversations that are going on around the market right now. Everything is about inverting or uninverting treasury curve, right? Credit spreads. There's a lot of spooky talk about the bond market. And I think you did a really simple form of analysis and kind of broke it down and just looked at the formula or the equation behind credit spreads rather than just talking about credit spreads, in a vacuum. So I'm going to give you the floor. Why don't you tell us what you found?
Yeah, I mean, first off, do we have any charts? I asked Alfonso to queue them up. I think you should have some charts.
They should be in there.
Okay, so yeah, perfect. So first off, we'll start here. Yeah, junk in the trunk, basically.
Okay.
When we're looking at this, so many people are going to look at this and go, oh man, credit spreads. We've been hearing about this for months, right? Credit spreads are widening, credit spreads are stressed, and so on. So the market has to follow and everything has to be bad. And really what we kind of find, and if you go through history, you find that there's plenty of periods where this happens, where sometimes something that's incredibly oversold will take a huge bounce and will kind of skew things a little bit in the favor of something else. And what we kind of found here is that, hey, junk bonds are still holding up. They're breaking out of a major base. They're starting to make multi-year highs. They're holding up really well, even with the pullback from in the yen crash and so on. Like, they're holding up incredibly well. So I think so many people are trying to make this into like, oh, it's very bearish for the market here. We all got to get out of the market. And I'm not saying, that everything's perfect. It's clear skies ahead. I am saying that right now you need to watch junk bonds. And as long as junk bonds are holding up, I'm long stocks.
You can mark up the lower chart here, the black line, in a pretty scary way, right? And that's just so this is just the inverse. Think of it as the inverse of credit spreads, right? So this line moving down and to the right would be like credit spreads when you hear blowing out, right? Moving higher. This looks like a top. So it's very easy to be kind of spooked by this and say, okay, credit spreads are rolling over here, or at least high yield is rolling over relative to treasuries. That usually means lower stock prices, right? But what you're saying is high yield bonds are good. Treasuries are just better.
Yes. And it's what we own right now. I mean, we own bonds. A lot of us are trading bonds in many different ways. We've got options on bonds. We have futures on bonds. We have ETFs on bonds. We know bonds are good. We're owning bonds right now for a trade. but we're also saying that, hey, stocks don't look too bad here either. And the title of it, you know, mainly, and when junk bond traders get out, I'm going to jump ship with them. Just basically states, continue to watch junk bonds, continue to be long this market. And certain sectors inside of the market, yes, everything across the board isn't perfect. You know, I don't want to own energy. I don't want to own certain things during this time, but I am saying that I do want to own utilities. I do want to own consumer staples. I do want to be selective about tech I'm buying. You know, there's lots of things to buy here still, and the market's still on a solid uptrend. So I don't want to get too spooked yet. I would just say, hey, it's summer. Summers are volatile. We usually see utilities and bonds even make these crazy runs in the summer, so it's not that abnormal.
Yeah. Yep. Real estate stocks, fantastic these days. Throw up the industrials chart. I kind of stole your thunder because I liked this so much. I already mentioned it. But, you know, we were talking about opportunity costs. Sometimes it can be disguised pretty well with the absolute price chart that looks like industrials has over the past decade or so. So we did this in the post basically to illustrate, hey, no one's sitting here saying industrials are terrible just because they can't outperform the NASDAQ. Industrials have been fantastic. They've been great. You would have made a lot of money if you've been in it for the past decade, right? So in that same vein, we're not going to sit here and say, oh, high yield's doing awful just because treasuries are doing so well, right? So this chart was kind of for illustrative purposes.
No, I like this because it really hits it home, and I like the addition that you had to this post, which is when you look at this, you would go, oh man, do you want to ever own? If you just looked at it alone, industrials versus the NASDAQ 100, you look at it alone, you'd go, man, I really don't think I should own industrials. You look at industrials, it looks good. And one thing, you know, that you have to think about is, you know, there's different trades for everybody. My grandmother would love to own CAT. She would be really excited about that, or industrial stocks in general. And then maybe my son would be very excited to own NVIDIA and get excited about the FOMO behind it. You know, there's a stock out there for everybody, but some people would rather want a very smooth ride. You're going to get that in things like XLI. Some people want a little higher alpha. You would get that in the NASDAQ or NVIDIA.
You know, speaking of owning cat, being you live in Ohio, do you also eat cat?
Whoa.
Yes, absolutely. That's what's going on here. No. What's funny is that keeps coming on, and none of us have seen it yet or heard about it. You know, it's like, it's funny because it's just this huge thing right now, and like people are like, hey, what's going on in Ohio? And I'm like, well, nothing. I mean, I have, you know, 5 animals in the house. They're all alive, so that's cool.
It's kind of funny, Jason, right? When the area where you are is the center of the discourse, right?
Yes, it always, and Ohio ends up being a lot of the discourse around election season. So when you get into election season, it is a very important state. I always hear all this stuff about Ohio and what's going to happen in Ohio, and Ohio being the battleground state. And then you hear about crazy political theories that kind of happen inside. So it's been funny, though. You know what? The one thing more than anything else I enjoy, the memes. The memes are phenomenal. The internet is great. It's just like the chat here. The chat here is phenomenal. I can just come on here and just laugh for like 20 minutes while I'm waiting for you guys. It's phenomenal. So love the internet.
Yeah. Thank God for the internet.
Internet's undefeated. Yep.
It wins again. All right. What else is on your mind? So pretty constructive week for risk assets. We finished strong. You know, what are you thinking about or looking for in the weeks and months ahead? We head into year end and the election.
Steve, I'll tell you. So, you know, there's an interesting thing that I was writing about the other day, which is my great uncle always talked about the reason why I trade futures. My great uncle talked about the time he didn't trade futures, which was in the 70s. He didn't trade futures. He didn't have any way to trade these commodities and so on. So he talked about this a lot with me when I was younger. So I've always been a futures trader, always wanted to work my way into being a futures trader. It takes money to do it. So you got to work your way up. It took a lot of time to get to the point of trading futures. So I look at it today and go, well, yeah, like the stock market's been choppy. There's been a lot of things, but look at the trends. And you look at the futures market, you look at palladium, natural gas. I thought it was amazing that our call, we talked about how we had 3 different trades on natural gas. Some people are trading the ETF. Some people are trading the call options on the ETF. Some people are trading the front month futures like myself. So once again, it's a very interesting time, and there are trades out there. It's kind of like everybody's going, all the commodities are dead, and it's like the second people started to say that, they were like, wait a minute, we're still here, guys. Don't worry. Palladium's been nuts. And I'm not saying I want to buy oil today, but I am saying that there's a lot of good things inside of that market.
Palladium looks so good. Huge week for Palladium. And look at silver here following through today on a monster move yesterday. So is it me, or are more and more things kind of giving us opportunities or starting to set up in a way that we might be interested in buying them from a commodity standpoint?
Yes, and Sam and I have been talking about Palladium for a while now. We've been talking about Palladium in the sense that it's been in this massive downtrend, right? And then we see this massive commercial buying, the most commercial buying we've ever seen in history. And then next thing you know, we start to get this breakout. We get a false breakdown signal. Now it's breaking the downtrend. It's a beautiful trade here. The risk to reward's perfect. It's good to take a swing at here. So I think people looking at something like Palladium, when we put it out, it was perfect time to take a swing. It's been up, I think, 12% ever since. Silver, same thing. We're seeing silver break over 30, continue to follow through today. I mean, I love the precious metals right now. I think the precious metals are set up and are acting just as they should. Gold is moving, which is usually how this cycle works. Gold starts to move. Because people keep asking this, people keep writing us in about the same question. When is silver going to move? Well,
right now.
Yes. Gold. Well, that's what we've been writing. Gold moved first. Gold always moves first. It's a safe fear in the world. Gold's going to move. And then next thing you know, you're going to see the gold miners, the majors move. We saw breakouts, all-time highs in AEM and so on. And now we're starting to see the silver start to move. We're starting to see some of the junior miners start to move. It's really, really good, and it's really set up for a major run higher here. So I really like the precious metal space. I think people got to pay attention to it here.
In any sustained bull market for an asset class, you should see broad participation, right? And growing participation throughout that cycle. Like you said, gold kicked it off. Now, this is just a huge bullish development for the entire precious metals trade, seeing things like, listen, silver's breaking out of this multi-year base right now. It looks great. Palladium digging in at a monster level, really starting to look like a primary trend reversal shaping up there. So I think this is just, par for the course in any bull market. And all it does is reinforce or support that bull market thesis for gold and other precious metals, seeing the other ones join in.
Yeah, GDXJ, I think it had like a 7% day the other day, like you and I were talking about it. So, I mean, we've been putting out trades on this for a while. So we've been putting out options trades. We've been putting out just basic plays on the miners. We've been putting out futures trades. There's a bunch of trades to do here in the precious metal space. I think the next thing to move, though, and something that people could pay attention to here is platinum. That's the one that after everything starts to move, silver starts to move, make a nice new high, you're going to see platinum be this crazy catch-up trade. It happens every single time. People go, there's no real use for platinum. It's crap, blah, blah, blah. People have this whole conversation. They write it off completely. Next thing you know, skyrocket right to the moon. This usually happens in platinum. People just haven't seen a precious metals bull market in a very long time. And if you haven't seen a precious metals bull market in a long time, you forget how they work. It's a good reason. That's the reason why I always back test things, go back, look at it, because I don't want to think of what I'm thinking should happen. I want to know what really happens.
Platinum. It's easy to forget about platinum.
It's easy to forget about all these commodities. Sadly, I have to look at them every single day. So
no, that's great. All right, so maybe more and more commodities are things that we can get long into year end. I think for now, like we were talking yesterday, these yield trades, whether it's Verizon, the bond funds we've all been talking about, whether it's staple stocks, utilities, there's a lot of juicy yields out there and things that are just now completing some beautiful primary trend reversals. I think it's a time to have a higher degree of exposure to less correlated trades and assets, to hang out in some lower volatility stuff, like all the things I just named, that'll pay you a nice yield while maybe we wait out this corrective phase. I don't think it's over yet. And then you can just sit on the sidelines if there's volatility in the tech stuff or further volatility in the growth of the semiconductors trade. You could just redeploy that cash in the future when the dust settles. So I think these are all great places to hang out. The commodities I would include in that list with all the yield stuff right now.
Look at 2016, you know, for example, 2015, 2016. I remember trading through that time and understanding like, hey, there were trades, but it was like cotton. And it was, you know, if you talk to fund managers, I talked to, I think it was Adam Koos one time, we were sitting out to eat, and he was talking about the fact that, you know, there was the year in 15 or 16 where he was buying cotton and so on. And his investors were just like, what the hell are you doing? But really, it's like there's always a trade out there. That's the thing. There's always something building. And the thing that usually happens, especially in election years, is you'll start to see wheat, which is already starting to break out of a base. You'll start to see natural gas start to move at around this time of the year. You see a lot of the grains start to move this time of the year. So there's a lot of things to pay attention to here. So I think there's a lot of trades in the futures space. Continue to just take the signals as they come. But it looks like it's kind of coming into this very interesting inflection point as a market. Like we're kind of looking at either we head towards this deflationary shock event, which I think is a very low probability, or we head into a very strong reflationary style environment. I don't think that's happening anytime soon. I think it's towards the end of the year we might see that reflationary environment. For today, I think we're just in this, hey, let's continue to own bonds. Let's continue to own gold. Let's buy these safe havens, and let's make some money in the meantime.
You know, there's a good question in the chat here we should address. Asking for, I saw somebody ask about specific stocks to play something like palladium. With these small market commodities, it's almost impossible to find pure plays in the equity market. I mean, with palladium, we do have the fund, the PALL. That's probably your best bet, but I don't know. Do you know of any names that would even be an indirect play or some sort of a play for equity exposure on palladium?
There are, but would I feel comfortable talking about any of those? No. And the reason is that some of these are so small that, you know, you're gonna buy them and you're gonna deal with 20-30% down moves and 30-40% up. You know, that's gonna be like one of those types of stocks. They're all penny stocks basically, so you're gonna kind of get into that market. Sure, I think there's one name out there, but it's still very
Anya Stillwater. I think that's the one. I remember we were talking about this last cycle. I think they have a lot of palladium. It's either platinum or palladium.
They also they mainly trade like a gold mine or two, so then it's hard because palladium has a very interesting industrial aspect to it. So because of that industrial aspect, you'll see it move in a very different way than the precious metals market. Sometimes think back to 2017, 2018, palladium was just raging. And the precious metals couldn't catch a bid. So, you know, I like it for the diversification. You get a little bit of diversification. It trends very well up and down. As a futures trader, it's just as easy to go long or short. So it trends very well up or down. But if you're just trying to get a pure play, I would just buy the ETF. The futures are always going to be your best space, but it takes a while to get your account to a size where you can trade that comfortably. It's a $100,000 contract. It's a big contract. And it's very volatile. So you have to have a big account to trade it. It took me a very long time to even trade palladium contracts. So I like the ETF. It's a small size. It's a pretty pure play. That's probably going to be your best bet. I agree with Steve on that.
I'm going to just throw a chart up because we're sitting here ranting about palladium.
Everybody likes to talk about palladium, Steve. Everybody's excited about orange juice. If you want to talk about orange juice, I could talk about that next.
I would love to talk more. I would like for you to excite me more about my nat gas trade.
Oh, throw a chart up of natural gas because we were just looking at this yesterday when we were talking. Natural gas, if you look at commercial buying, they continue to buy even though it's been moving up in price. If you're looking at something that has a nice bottom, you know, everybody likes a nice bottom. We got a nice bottom here, ready to break out. It really looks really good. The one thing I don't like is the way the forward contracts look. The curve doesn't look great, but I think here is a great play for a bounce. Like if you're a futures trader, be in the front month contracts. And like I said about the palladium size, the size of the palladium contracts are huge, but there are natural gas contracts and natural gas mini contracts. So you could trade these mini or micro contracts from natural gas and you still can get the alpha from it. And it's a pure play, but it's a very small size. So I would try to trade those if I was trading the natural gas market, say in the front month, because that's where all the money's going to be made. That's where that big move's going to come from. So, and the ETF also, that mainly trades the front month, first 2 months usually. So you can still make some alpha there too. So I think there's a bunch of ways to play it. I don't mind the ETF plays. I even like the call options on the call options actually look good too.
Throw up the palladium chart, and I got nat gas too. What's the level in palladium? What do you think? Like 95 in the PALL?
Oh, in the PALL. Yeah, I would say, you know, risk level.
Yeah, 95, 96. Jump this base.
Yeah, I mean, I would really try to, with a contract that's this volatile, right, Steve? When we're looking at things, we always have to understand the volatility of what we're trading. Natural gas volatility is huge. You know, 30% even can be a normal range in a trend for natural gas. Palladium's very similar. It's going to be a 20%. Depends on your trade. If you're trying to just take a short-term swing, you're trying to get to that, let's say 120 zone. I would only use, you know, maybe a 5 to 10% stop. So I would use something right around the red candle here, you know, right under the red candle, taking a swing at it. Keep your size small, because once again, it's let's say you use $100 for this trade, you take a 10%, you know, let's say your $1,000 account, you know, you have $100 per trade, you have your stop, just $10 out. You basically can take a swing at this and only lose a little bit. I think trades like this that are bottoms usually take multiple times to make happen. So I think this could be a great trade here. I think you could just trade it to the upside, manage your risk right under that red candle, and take off. So I think it's a good trade. I think it's a perfect trade. Sam and I have been talking about it for weeks.
No, I like it. Throw up the nat gas chart. Sorry, I'm making charts over here.
No, it's okay. I mean, we could have just talked about palladium for another hour.
I know you could.
I could.
And the Sabanye looks interesting too. We'll talk about that as well. Here.
Yeah, natural gas here is really, really interesting. I mean, we have a volatility squeeze, so it's a band squeeze or volatility squeeze indicator. We have a breakout. We're getting above that VWAP soon. I mean, it's really a good setup here. And I think what generally happens is traders, when they trade natural gas, they put their stops so tight. Either you have to be very quick in and out, or you have to be willing to have a very wide stop and hang in those massive trends, because this thing will move and it will be a big trend, but you're going to get chopped up. It's going to be rough. It's not going to be easy to trade at first. So you could make a swing here to 20 pretty easily. A swing to probably 23 would be possible. So I really like this chart. I like the trade. It's a great idea here.
I think this is the chart we use for the breakout multiplier. One thing that you can do, like you're talking about, not for the faint of heart, nat gas, you can get chopped up pretty good. But look at, all we did here was we got a little of this moving average crossover system on the Bollinger Bandwidth indicator. Once that volatility starts expanding, we get some nice trends, some nice short-term moves, right? So just the 4 times we got a little crossover in volatility, which says, hey, expect volatility to expand over the short term. We were down 46% in a big wave lower earlier this year. Then we bounced more than 50%, and then we sold off more than 40% into the late summer, the recent lows. So all we're doing here is making the bet that we're entering another phase of rising volatility or expanding volatility, and that the direction will be up this time.
No, and this is one of my favorite indicators. Everything I build for my systems is mainly built on this premises. The idea of volatility, when it squeezes, it usually expands. And that's what makes great longs and shorts like you have here. You know, you could buy put options, you buy call options, whatever you want to do. You can make a ton of money on both sides of this market here. Yeah. So great setup here, great buy, great opportunity, still a great opportunity. I still think, you know, some people will be like, I missed the move. I think the move's just getting started. I think we get up and over that VWAP, we could possibly get up to 20 again pretty easily.
Yep. Love it. SBSW. Throw up the SBSW. Yeah, look, dude, this is interesting too. I mean, this looks like crap compared to all the other precious metals mining stocks that we've been buying. And a lot of them look great. Like I Am Gold, New Gold, the Ego, the Alamos Gold, like so many really good looking gold mining charts right now. This is not one of them. However, if Palladium is going to start, outperforming, complete this little base that we just showed in the Palladium chart, you got a level here. You got a level here, and we're squeezing back above those pivot lows today. I don't know what the short interest is in this name. I would imagine it's not very high because I don't think it's the most liquid name. It's an ODR. However, back above those pivot lows, call it $4. This could be, look, this could move 50% quick back up to the upper bounds of that range, $6. This thing has been slaughtered over the past several years. SBSW at those lows from last week, that would have represented a drawdown of 85% from the 2022 high. Whew. Yikes.
That's
Would you
massive.
say it's been like a complete and total washout for some of these commodity stocks?
Yes. You're going to see a lot of this at the end of cycles, even at the beginning of cycles, honestly, that this all happens over and over again. So the commodities, it's the reason why I always tell people, like commodities, commodity stocks, it's not a thing where you want to buy the dip. If you just back test a simple system, 4 days down system, you do that in the S&P 500, you have a win rate of over 75%. So just basically buying anytime the S&P 500 is down 4 days. So if you do the same thing in oil, gold, whatever, it's basically the start of a new trend. So this is but this finally looks like a washout, and I like the false breakdown signals. To me, that's one of the most powerful signals, similar to Bollinger Band breakouts and so on. When you have this huge false breakdown, and everybody can do this on their own charts. You could look at charts and continue to find it. People look at Head and Shoulders and go, Head and Shoulders are great. Well, what's even better than a Head and Shoulders is a false breakdown of a Head and Shoulders pattern. So here we got this false breakdown. I think if we get up above that level, we could absolutely take a little run here. You're going to see a lot of these commodity stocks and the precious metals based stocks start to move. They're already starting, but the trend will probably continue, and it will be massive.
I just want to say, I'm just checking out the early action here, 9 minutes since the opening bell. Uber is still up like 5.5%, 6%. This is a huge move so far today. That stands out. And I'll also just say, I mean, Palantir, dude, day in and day out, it's like you get a new high in this one every session. Really wild. I don't think there's a stronger stock in the tech space or growth space right now than Palantir. I think ServiceNow maybe deserves an honorable mention, but the relative strength in these names in a tape where, think about it, growth stocks, speculative growth stocks, in the case of Palantir, we were talking about, the struggles for software this year. This relative strength over the near term really, really stands out in these two names. If the selling pressure comes off of the broader subsectors, I think these names just explode higher from here.
Yeah, and I really like the idea here of continuing to own things. Like, I think too many people are going to write off this market on every pullback, especially. But the thing is, it's summer. Like, you got to always understand it's summer. Like, I just understand as a trader these days. I used to try to control it. These days I go, it's summer. I know I'm going to get chopped up. I know it's going to be a lot of false starts here. But I also know, like, the more if I'm set up for the move that's going to happen in fall into winter, I'm going to be better off. And that's the thing. That's why we continue to take the silver trades. We continue to take the gold trades, continue to take the palladium trades. And now we're doing really well. So now all the trades are starting to trend a certain direction. The market's starting to move. I like the way the market looks here.
I think it's easy in light of some of the new evidence that we're getting, I think it's easy to overthink your trading or your investing right now. What do I mean by that? It's easy to look at charts of XLP on a relative basis or XLU on a relative basis and say, wow, that's really defensive. It's easy to look at a chart of bonds and say, that might not be so good, right? All these new uptrends in defensive assets. But really the best course of action for now, because we don't know if this is the end of the bull market. We don't know what the future is going to bring, right? So the best course of action is to probably just buy the real estate stocks, buy the utility stocks, buy the bond funds that are completing these primary trend reversals, and not overthink the relative trends.
Well said.
All right. Jason Perz, man. Thanks for hanging out.
Hey, thanks for having me on, guys. As always, a lot of fun. Thanks for the chat.
We will see you next week, man. See you in a few days.
Yeah,
few days.
Drop a link to
Chicago.
the post too. Bye, Jason.
All right. See you later.
All right.
Can we drop a link to his bond post? Really good stuff.
Oh yeah. Give me a second to pull it up. Actually, I haven't read it yet. But yes, I will drop
Donovan in the chat,
as
shouting
they
out
say.
the home builders.
Hey,
Yeah.
you know who's also having a good week? I saw Justin Spiller talking about this on Twitter. He's been pounding on the table. Is Redfin?
The red.
I've seen that thing.
One of the homies sent me a chart of Zillow. Slipped into my DMs with a Zillow base. So yeah, look, these things are getting closer. Fonz, you know what to do. We got some of these on our list. We've been waiting on these reversal patterns. And you know, Spencer, these are the kinds of stocks. I think of Redfin and Zillow the same way I think of a UWMC and Rocket. In other words, these businesses are just so freakishly similar that if one's breaking out, you know the other one's about to break out too. So you look at the chart of Redfin right now, making these new highs. It looks great. It looks like it's resolving this base. And then you look at Zillow and it looks like, not quite done yet. I think you could jump an entry in Zillow here based on this breakout in Redfin. You don't want to make the bet that those two look different over longer time frames.
Yeah,
right?
no, of course not. Rates are coming down. Activity ticks up. That's all you need. That's all you need, right?
And the homies too. Don, you're right. Big move. Giving a little bit back here, but ITB up 1.5%. Great. It's great. Really good. Industrials and financials, another big move today. Financials, maybe only 1/3% for now, but just another green day coming off of that hammer candle that we talked about at the top of the show today, right? So this will be now the second day of follow through off of that hammer candle, which was a big retest back on Wednesday. So I think this is a really positive development for the bulls. XLI, Spencer, I mean, geez, we're percent from new all-time highs. So happens fast.
What got into Unity today? Unity's up 8, almost 9%. What they canceled runtime fee. I don't know what that is. Opting for traditional price increases instead.
You know what? I'm gonna
they're changing their pricing model. Okay.
I'm gonna tell you what's going on with Unity. It's really simple right now. First of all, that's a really cute little base in Unity. They are running these speculative growth stocks, and the higher the short interest these days, the better. Dude, we're having more and more stocks pop up on our freshly squeezed list. These heavily shorted names, these really arky names, they're starting to
Really? I just looked at the ARC and it's having a good week, but
Chewy, Robinhood, the Roblox, dude, Zillow would be in that group. Rocket Mortgage is in that group. These things are squeezing really nice, like one after the next. The Upstart. Have you seen the Upstart? UPST. Nice couple of days here. So look out. Look out for the speculative.
Everything had a nice couple of days, right?
Yeah, but I'm telling you, they're squeezing these stocks, bro. They're squeezing these things. Look at Robinhood the last 3 days.
All right.
I wouldn't lie to you. Look at Roblox. Look at the Roblox. Highest level since what? February? We're talking about Roblox.
Yeah. Okay. Now you're interesting me. Highest level in 7 months. That interests me.
Yeah, dude. I'm telling you, it's a thing. It's a thing. It's happening.
All right. Fonz, you want to come on? You got stuff going on?
Get him in here.
All right. Let's bring Alfonso on.
Hey guys.
What's up, dude?
How's it going?
You tell me. What are you watching this morning?
I mean, this week I'm watching gold making new all-time highs. I like relative strength in different asset classes. So it's hard not to pay attention to gold making new all-time highs. I bring this chart. It was coiling in a tight range right at the 161 extension. Now it's breaking out. I think we're ready for next leg higher. So I really like gold here, honestly.
It looks great. And how about silver? I like silver just as much or more for the catch-up trade now. Silver's coming out of that range just like gold was doing, many months ago.
Yeah, I have here the chart.
Look at that thing. So gold came out of a similar base already as silver, and if you go back, has already hit a price target. Silver's just coming out of like the same exact pattern. It's just happening now.
I'm waiting for this consolidation in silver to complete and follow and catch up to gold.
Love it.
Let's see if this is the moment. But right now, gold definitely caught my attention. Looking so strong, different ways to play this asset. So I like it here.
I mean, silver goes on to make a new all-time high this cycle. That's a huge profit potential. Silver miners also best day since November 22.
That's huge. That's huge.
Yeah.
It might be the start of a leg higher for silver too. So pay attention to silver. That's for sure.
And are you finding that other things are starting to work really well within the commodity space also?
I haven't seen the commodity space too much, honestly, but precious metals, like in general, it's catching my attention. I agree with you with the natural gas. It's carving out a big bottom formation, and within that big bottom formation, it's trying to resolve higher from a tight consolidation pattern. So I really like it for a catch-up trade. That's for sure. And again, I think UNG could be a good vehicle if you want to get some exposure to the underlying. So that's what I'm saying right now.
Okay. Do you guys see? I'm sorry. Do you guys see the app loving right now?
APP?
Spencer, have we talked about this week? Was this earnings? This must have been earnings, right?
I'm looking right now.
So good. This stock has been as good as anything.
Look at that base. I mean, it's reaching its former all-time highs from 2021. That's huge.
I should have bought this thing just because it reminded me of McLovin years ago, but instead, just watching it.
And look at that pattern since May.
Talk about a V bottom. Look at that. That's a deep. You know what you call that pattern? That's a deep V. That's a deep V. Spencer knows about deep Vs, right? You were just hanging out on the Jersey Shore. That's a deep.
I'm well versed in the deep V. Yep.
Spencer used to rock a deep V back in high school.
Yeah, I mean, it's a confidence thing, but yeah. Ons, we'll see you in a couple of days too.
Mm-hmm.
Very, very excited. It will be my first time in Chicago, so
Steve too. 2 years.
Yeah, I know.
Yeah.
That's crazy. But
it's
fun. Yeah, I like it. Do you prefer baseball or football?
Me?
For me or him?
Yeah, you both as Americans.
Baseball's not for me.
Not for you.
I like baseball, Fonz.
Okay, yeah.
But it also depends on like who you root for. Like if your team is better in one, like my baseball team is better than football. So
which is your team?
Yeah,
Yankees.
All right, let's do some recess and get out of here.
That's it.
All right, a couple of announcements to make. First, I'm going to drop the link in the chat and throw it on the screen. I haven't mentioned this yet. Shame on me. I'm mentioning this, but if you, sorry, Fonz, the QR code's over your face, but all right, take the code off, whatever. The link is in the chat. If you want the charts and the slides from this show sent into your inbox every day, get the Stock Market TV Daily Rundown. Yeah. I send out an email usually around 11 o'clock in the morning, sometimes a few minutes after, with a rundown of the show, what you missed, and a link to get the charts. So if you want that interests you, and also you get Alfonso's chart of the day, which comes around 5, 6 o'clock in the afternoon, somewhere around there, right? In the evening.
And yeah, go ahead.
It's
Go ahead.
charts from the show. It's Fonz's chart of the day, what he's seeing. 2 emails every day in your inbox. If you want to get it, the link is in the chat. I'll pin it to the top of the chat right now. And it is also in the description on YouTube. I'll also throw the QR code up over Fonz's face one more time.
Can I?
You want to scan it with your phone.
Are you done?
But,
can I say something?
yeah.
If you are not getting Alfonso's note, I don't know what the hell you're doing. You got to get Fonz's note. It's been absolutely on fire. He's been writing, several posts a day. He's got a lot of ideas, a lot of stuff on his mind, really enjoying it. So sign up for that. And, we couldn't help but think that some people just probably don't want to listen to us ramble for an hour and a half every morning. So what if we just put all the highlights in a deck and all the charts and everything that we talked about? That's what you get with the rundown. So sign up for that too. I think it's a really nice report.
Yeah. Also PSA. Wait, Fonz, were you gonna add something?
No, I appreciate that comment.
PSA, after the show's over, I go into the description and I edit it and I add timestamps from everything that we talked about. So if you come back to this very stream in like a half hour, you'll see just timestamps. You can just jump around, skip around and see what you want to, watch what you want to watch. So yeah, get the charts, get Fonz's chart of the day, and good stuff. So that's the first thing I want to say. The second thing I want to say was, if you missed JC's State of the Markets yesterday, you should check that out as well. Free thing. It was on YouTube, but I will also drop the link in the chat for that as well.
Really?
And there it is.
Yeah.
Wait a minute. There it is. Nope, wrong link. Sorry. I'll get you the right one in a second. Yeah, there it is. Sorry.
And then I think we need a big programming note, because next week is going to be a little bit different.
Yes. So,
yeah.
On that note, as far as the morning show goes, we are on I wrote it down, 225-hour break.
Yeah.
Right? Yes. 225-hour break. Well, we are taking next week off from the morning show. The guys will be in California Monday and Tuesday. Then we're all going to meet up in Chicago on Wednesday. Speaking of Chicago, if you are in Chicago or near Chicago, Illinois, Wisconsin, Michigan, in Indiana, whatever, if you're in the area and you want to come hang out, you want to go to the Cubs game with us on Thursday, we've rented one of the rooftops across the street from the field. We have like a couple of spots left. And when I say a couple, I mean like 4. We have like 4 spots left, right? So if you want to hang out with us, email me. I'm going to put our email up on the screen right now. Where is it?
And we're not live streaming this event, right? We can't never do that. All right.
No.
So the homies in the chat wanted to come hang out. Do we run reruns or something? Like, can they just come and hang out in the chat even if we're not here, or no?
You can always go to the chat that is on our website, stockmarkettv.com. There won't be a YouTube chat for you, but you can hang out in that chat. If you want to go to the Cubs game, email us. The email is on the screen. Just put Cubs game or something in the subject. Again, we have like 3 or 4, maybe 5 spots left, right? I'm not kidding. It's only a couple.
But you don't need a ticket to the game, or we're like going to a restaurant.
You do not need to buy anything. I mean, you might have to pay for parking if that's your thing.
Yeah.
But the ticket itself is, we've already rented the space. You don't need a ticket. Right. You just need yourself.
But explain, we're watching from the outfield or something, from a bar in the outfield.
So Wrigley Field, if you don't know, those of you who don't know, is the oldest ballpark in America, and there across the street there are several apartment buildings, because this ballpark is built in 1908 or something. And on top of the buildings, they built these basically bleachers, right? You can watch the game from the roof across the street. So that's what we're gonna do. Thursday, Cubs Nationals in Chicago. If you're in the area, you want to come, email on the screen, and we'll try to get you in. Because we have yes, I said that, Sean. It's free. Tickets are free. You don't have to buy anything. We've already got space. So,
wow, that's an old building.
Morning show is off. Like I said, all next week. We'll be back on Monday, the 26th, I think.
All the shows are off. I'm not doing any shows next week.
It's the 23rd. 23rd we'll be back. And our guest on that day is going to be Perth Toll. That's exciting.
Oh,
By the way, speaking of guests,
we'll see her next week too in future.
Dan Ives is coming on the show.
Thank God.
Strazza. He'll be on the week we get back, actually. So
wow. I'm gonna wear my best outfit. I'm
for
gonna wear
Dan?
my best outfit for Dan.
Cool.
Ives. I mean, that guy is the best dressed man on Wall Street. Like, it's so good.
Yeah. So no morning show next week. We're still going to be doing a couple of shows. Like we'll still do a chart request live on Tuesday. We won't be doing the flow show. We won't be doing what else? Off the charts. We won't. It's going to be a light week. We do this whenever we all get together. We obviously can't do shows and hang out at the same time. So no, I'm not going to make a YouTube. Just if you want to chat, go to stockmarkettv.com. There will be a chat there. There's always a chat there. And actually, you know what? I think in order for me to do that, I guess fine. I'll have to make a YouTube in order for that to happen.
This announcement segment's really running.
I know. All right, I'm done. I got nothing else. Okay. I just wanted to say that. Cubs game, get the email. No shows next week. That's what I got.
Go Hurricanes. We will miss you in the chat. We will miss you very much. We'll be back in a week. Hopefully we're not flying Boeings and we all get.
We picked a bad week. There's a Fed meeting next week. We picked a bad week to
no one
do that. That's all right. It is what it is. All right.
The cut is in. All right. Bye, everybody. Have a great
guys. We'll see you on Monday the 23rd, or if you're in Chicago, maybe we'll see you there. Bye.
Bye, guys.
I can't take no loss. I don't even know what it costs.